Yeah, hi, Kelly. Thanks for having me on again. Yeah, so we're looking for five key things to signal a sustainable bottom. I think some of the earlier price action we saw this week was due to a technical bounce. Things have reached really oversold levels. And so we're looking for inflation to slow, economic data to point to solid growth. I think we're in the middle of a soft patch, actually. Credit spreads to remain in check, earnings revision trends to be up, and technicals to become washed out.
All right, so let's kind of elaborate on, what those five things in particular would look like. If I'm putting my little dashboard together, what do I want to see happen?
Well, first of all, I think the market action today, and we've seen over the last month, is all about the Fed and other central banks. Rates are up again today. Yesterday, they were up as the BOE and the ECB sounded more hawkish, and may, in fact, lift interest rates, the ECB, this year. And we have to get through next Thursday's inflation report. Our view is that interest rates are going to continue to grind higher. They need to renormalize. The support that we've had for the last 2 years from the Fed and physical is gone. And we're in this transition period away from the sugar high that we had. And that's just not a time where we want to buy high multiple tech and other stocks.
All right. So basically, number one, technicals are washed out. Number two, inflation shows signs of decelerating. Number three, economic data points to solid growth. Number four, credit spreads remain in check. Number five, earnings revisions trend flattish to up. So let's go over those for a second. Inflation, maybe not decelerating yet. So number one, I'll leave it up to you. If we're not quite there, that's a no. Number two, that's a no. Number three, I'd say solid growth, yes. Credit spreads in check, yes. Earnings revisions flattish to up. Are we a yes or a no there?
We're a maybe with earnings revisions. They've been very flattish and they've flattened out. There's been some big upside surprises and there's obviously been some big downside surprises. And we're not washed out yet on a technical basis. We look at the percentage of stocks above their 2-day moving average, and right now that's around 35%. We'd like to see that under 20%, and that's what we saw back in the March 2020 lows, the December 2018 lows, among other lows that we've seen in the past. So the breadth of the market has been weakening, even though we've had these technical bear market rally bounces, if you will.
So interesting. So we've reached a couple of these thresholds, but maybe not some of the other ones. Again, technicals, we'll see if inflation turns, the data holds up, credit spreads remain solid, and earnings revisions start to look up. Chris, we appreciate it. Always love to get a real specific game plan like this one. Thanks for your time today.
Shepard Smith here. Thanks for watching CNBC on YouTube.